Welcome back, ladies and gentlemen, to Fortitude Gold's channel, a dividend-creating gold producer in mining-friendly Nevada. Joining us, as always, we have Chief Executive Officer Jason Reid. Welcome back.
Hey, thanks, Kyle. Thanks for having me.
It's like I only just saw you last week, but this week we're diving down into some Q&As. Recently saw some people actually having some questions, which if you have any questions, let us know what you think in the comments section below. But first and foremost, somebody was asking about your cash position. I mean, you guys are sitting on over $30 million, and he was kind of just iterating this inflationary environment. How does that affect your cash position? Are you guys just stacking that cash, using it for projects? How do you feel about sitting on that much in this environment?
Sure. It's a good question. We have been very focused on that question as we look toward potentially developing Golden Mile, right? And so the choices we have in front of us are, do we sit on cash that next year will be worth less, and whatever we need to buy next year will be worth or cost far more? Or do we go ahead and evaluating the risk reward, buy everything we can now to help lock in the costs, because costs just keep going up. And to give shareholders a sense of the environment right now and the inflationary environment, when we put things out to bid, they'll oftentimes give us a quote that's good for 30 days. Well, more recently, they're good for a week. So how do you operate in a situation like that where supply chain and costs are just moving so quickly that vendors and material suppliers won't put out a bid longer than a week? So we have taken the strategic position on a risk reward basis to go ahead and buy most everything. We bought the crusher, we're buying the process facility that we're going to put the gold to the carbon phase, even office space we've purchased. So that's how we're trying to get in front of and stave off this inflationary environment. It's also very important too, in this environment where the supply chains are so difficult, we want to make sure we have this stuff. So I would rather it sit on our yard and a lay down yard ready than, waiting for a pump or something that is a long lead time item that's not coming in. So that's what we're doing with our cash flow to get in front of the inflationary environment. It's not ideal, but it's the environment in which we live.
Yeah, it's very interesting to say the least, and I appreciate the insight. Now, actually getting the gold out of the ground, I guess, you guys are cash flowing, you're paying the dividend, and there was just that question as well on how you guys are going about kind of the gold volatility, I guess, which is pretty intriguing to say the least in this kind of recessionary environment. It has been holding up fairly nicely, not going up as much as I would have expected it to, but are you guys doing any kind of I guess simply like pricing arbitrage? Are you looking for specific dealers and trying to sell on spice? Are you trading it or just cash flowing whenever it comes out of the ground? How does the sales chain look?
Yeah, no, I saw that question, and it's a good question on whether we time the market, try to time the market. We don't, for a number of different reasons. First and foremost, security. We obviously don't have a crystal ball. So if we're trying to time something and we decide to sit on a bunch of gold, that becomes a security risk. We try to pour and ship the same day, so we don't have any storage holding risk. And so that is one aspect of why we don't try to time the market. The second is, if depending on what time frame you're looking at, if you're looking at some of the shorter time frames, a month, a quarter, there looks like there's some rhythm to the movements in the price of gold. But if you take a 6-month window and you look back at what's happened in the last 6 months, early in the year, it was pretty low. It skyrocketed to 2050 in a short amount of time. And then since then, it's dropped back down to 1790. So, while it on one hand sounds, okay, let's try to time this, we don't believe we can. There's too many factors. There's too many X factors, too many issues that could spike gold or pull it back down. And so we just sell when we produce, and ultimately it averages quite well, I believe. You're not missing the spikes because you're trying to time it to get it higher, and yeah, you eat the lows, but on balance, I think it's the best approach. So no, we don't try to time the market in our sales for those two reasons.
Yeah, and hindsight's always 2020, but considering gold's holding up as high as it is, we're still kind of in this new renaissance for gold, considering the top 50 miners are producing cash flows they haven't seen historically, right? Are you guys kind of seeing the same deal? What's, if you don't mind me asking, kind of the margin spread there as well?
Yeah, we run our budgets off $1,700 gold, and we're 18 consistently this year, so we're well ahead on our cash flow projections because of that. But yes, this is not something you can predict. So gold could just take off for a number of different reasons. And the base case, I think around 1800 is really important. It could pull back to 17, heck, it could pull back to 16 or 15, and we'll be the last man standing because we're one of the lowest cost producers. So I'm not too concerned about short-term volatility to the downside, but anything above 1700 is great for us, given what we budgeted. And if the powers that be break the market too much, and then they have to move away from quantitative tightening back to quantitative easing, I believe that could be a massive catalyst for gold. And then we're all off to the races. So yeah, we're seeing the same thing as the majors. Anybody who's producing gold at a reasonable cost is doing quite well. And for us being a low cost producer, yeah, it's awesome.
Yeah, so you guys got a good margin of safety there. So that gives a little bit more comfortability, I'm sure, to the shareholders. But I'm going to pass a question off to you guys again. I'd love to know what any of you guys think out there in that comment section below, and perhaps we can do some more Q&As down the road. Consider subscribing, because as news hits the wire, we'll also update you here. But on that note, stay cool, stay awesome. And as always, I look forward to catching you in the next one.